Okay, that should be better. Well, at least I learned something about selecting my audio source and not letting this software figure it out for me. I just manually selected my audio source. So that'll be one of my checks. Well, that's frustrating because I talked for a good amount of time there. No data. Hmm. Man, what is going on here? Play the chop. Well, talk about annoying. I probably talked in that last video for 20 minutes about T plus 2, daily time frames, why T plus 2 was lining up, why it was not an easy short, but probably the one of the more easy shorts today. Just how the market's set up. Now I'm just discouraged because my coffee was had already had already kicked in and I was feeling good, so I was talking well and talking fast, getting a lot of information out there. So now I'm just done. All right, I don't want to be a buyer on any rollover here. Let's move up the stop. Yeah, we're going to get another opportunity here. And all right. That Pico trading jacket shipped out yesterday. Gosh, their customer service is so good.
Opening order filled. Opening order filled.
What?
Opening order filled.
Oh, I'm filled. Okay, cool. A little volume taper. Oh, this is interesting. Hmm.
Order placed. Opening order filled.
All right.
placed. Border placed. Border placed.
Opening order filled. Opening order filled. Opening order filled.
Border placed. Border placed. Border placed. Border placed.
Opening order filled. Opening order filled. Opening order filled. Opening order filled.
Border placed.
Opening order filled.
Border placed. Border placed. Border placed.
Opening order filled.
Border placed.
Opening order filled. Opening order filled. Opening order filled.
Border placed. Border placed. Border placed. Border placed.
Opening order filled.
Border placed.
Opening order filled. Opening order filled. Opening order filled. Opening order filled.
Border placed. Border placed. Border placed.
Really? There you go.
Opening order filled. Opening order filled. Opening order filled.
Border placed. Border placed.
Opening order filled.
Grind,
Opening
grind,
order
grind.
filled. Stop filled. Stop filled. Stop filled. Stop filled. Stop filled.
Border placed. Border placed.
Opening order filled. Opening order filled.
Border placed. Border placed.
Opening order filled. Stop filled. Stop filled. Opening order filled.
Border placed. Border placed.
Stop filled. Stop filled. Stop filled. Stop filled.
Border placed. Border placed.
Opening order filled.
Border placed. Border placed. Border placed.
Interesting.
Border placed.
Opening order filled.
Border placed.
Opening order filled. 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 Profit order filled. Stop 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 filled. Profit order filled. Profit order filled. Stop filled. Stop filled. Stop filled. Profit order filled.
Choppity chop.
Profit order filled. Profit order filled. Profit order filled. Profit order filled. Profit order filled.
Come on, one more. There you
Profit
go.
order filled.
Order placed.
Opening order filled.
Order placed. Order placed. Order placed. Order placed.
Opening order filled. Opening order filled. Opening order filled. Opening order filled.
Order placed. Order placed. Order placed.
Opening
Bar
order
from
filled.
hell.
Order placed.
Opening order filled.
At least for the shorts. And that shit is funny. And it turns out they're sending my trading jacket to New York.
Opening order filled.
Or so it seems on the UPS tracking number. They just emailed me.
Opening order filled.
Order placed. Order placed. Order placed. Order placed.
9:30.
Order placed.
Opening order filled.
Order placed. Order placed. Order placed. Order placed.
Oh, come on.
Order
That's what
placed.
happens when you.
Order placed.
All right, I'm fighting
Opening
for.
order filled.
I'm
Opening
fighting
order
for a
filled.
position here.
Opening order filled. Opening order filled.
5.5 ATR. This is the sweet spot right here.
Order placed. Order placed. Order placed. Order placed.
What's
Opening order
happening?
filled.
That was
Opening order filled.
a bullish
Opening
bar.
order filled. Opening order filled.
It's called volatility, my friends. And now shorts. Oh my gosh, it's not. Is it going to retrace? Is it not? Freak the longs out for a little bit. Let's look at the footprint. Oh, 93s. Okay. I should have looked. Gotta fight for position sometimes.
Order placed. Order placed.
Man, so I did like a virtual, not a virtual. I did a whole tutorial on all my positions today. And I had my microphone off. It was, I think, Rick D. said, "Are you by any chance talking?" Or I don't know. He must have had some sort of intuition. And it was like 25 minutes of non-stop going over all my daily time frame charts, trend lines, deltas, T plus 2, everything. All my marked up charts. They're not marked up anymore. I was so disappointed. And I had just had coffee, so I went through everything for a long time in very quick order. And then Rick D mentioned that. I was so pissed. So now I'm just discouraged. Hey, Lucky Prod. I hope you're having a good trading day. I don't know if you guys saw at the bottom there, I did stop out some. So I realized some loss. But you got to stop out. You have your predetermined stops, you have your thesis, and I let the winners ride, so they offset my losers by, I don't know, 17 or 1800 bucks, something like that. I didn't think that this bar would go straight up. I thought it would take, eh, usually when you get a bar like this and they want to buy, it takes 1, 2, 3 times as long for the price to rise back to the initial sell-off point. So instant profit in 5 minutes, I'll take it. But that's due to the ATR being what, 5.5 essentially. You have a hey, thanks. I appreciate that. Both of you, EN Lucky Prod. No, it's just that's Murphy's law, right? Your best um, uh, I can't even talk. I need more coffee. I've been up since early today, but my best content basically um, was never heard. So I was just talking to myself. And I'll admit it was good. It was like really good. I mean, I went through everything. I went through the TPO. I went through Bookmap. I went through this high time frame chart and explained my whole thought process with T plus 2, which is right here, T plus 2, and yesterday's close, T plus 1, and why I shorted 22, and why I covered 01, and then why I covered this virgin point of control, this thick light blue line or baby blue line here down at 80, and I covered it at 81, and then why I started getting long and explained to everybody that I took profit too soon up here at 85, 86, 87. And then that I shorted this area and why I shorted it for a scalp with tight stop losses. And then I explained why I shorted here, and then I covered here, and then I got long here, and then I covered here. It was all on the video. And then I attempted to get short here. But what happened? Yeah, Rick D told me, hey, your audio's not working. And so I canceled my orders and I went about figuring that out because it annoyed me so greatly. Took me out of my my state of I don't know, my peaceful state. I was in a state of equilibrium here, and then when he said that, it was like a shock to my system. Like, oh, no way. So I just canceled everything and started. So I would have been short here, but only for a move to about here. So this surprised me. So yeah, it's a good day. I made my weekly goals in this area, and then I've since just been playing small size. So figured I'm not too worried about competing for fills. So I will share what I'm doing. I have no problem with that. But yeah, I did learn that I need to, with this software that I use, OBS, I need to make sure that I go manually set my audio input. It's supposed to um, automatically sense the audio, uh, and it doesn't give me a warning when it doesn't sense it. So it just shows that it's green, and I should have been able to see like the decibel meter moving, but I didn't. I just didn't check it. More focused on trading. The setup I have right now is using the Sierra chart window as a source, so I know that I can't like fuck it up too much, like show any personal stuff. So I just kind of, as soon as I hit that, I was like, okay. Wasn't even looking at the OBS software, like the screen recorder and whatnot. So that is why I missed it. So for my auxiliary audio, I just need to go select that every freaking time. So pretty annoying that I missed that. I'm gonna step off the mic. Oh, thanks, Lucky Prod. And get some coffee. I'll be back in a little bit. Where are you going? Where are you guys going? You're gonna go visit?
Opening order filled.
Oh, okay. Oh, that's cool. That's a good. Coffee. I'm sure it'll be fine. All right. Well, drive safe. Have a good time. All right. Love you guys. All right. Adios, Benjamin. Oh yeah, the car's outside. You want me to? Oh, you have the. Okay. All right. Love you. Bye. Oh, I don't know what my hardware is. I had someone configure this trading rig for me. The Pico jacket people sent my jacket to New York. I live in California. I said, I told them, hey, my tracking number shows New York. I'm not in New York. Apparently, they have snowstorms there, and they're really behind. So the lady said, oh, she sent me the wrong tracking number. So let's go take a look. Hey, I filled another contract down there. Awesome is as awesome does. I like the positivity, my friend. Let's see. Let's see what this lady is saying. What? Right. Well. Come on, take the stops at 97.50. You know there's stops up there. There's liquidity. So what do you think the algs are going to do? Pull and stack. There it is. 97.25. Pulled. Let's see what the footprint shows. Well, I guess the 17 contracts, not a lot of liquidity, but volume's building underneath this area. So let's see. And there's the obligatory 200 lot attempted sell through what? 96.75. There you are. Chop chop. Okay, they corrected my trading jacket. UPS. I don't know if I think they rerouted it, so it'll probably come a little later. Oh well, not in that much of a rush for it. Interest here, interest here. They're looking for fills. I'm just gonna let you guys know. I think they're looking for fills on the bid. I could be wrong. Essentially, price is doing this. Maybe I should make that a different color. Here, let's back it up here. Let's go to yellow. There you go. Let's see. So, one. Did we get the two fibs? Yeah, we did. Just about. When you account for movement above, yeah, we did get a 2 fib retracement. So super healthy for the long side. Typically. When you get a move like this, and then you get like a retracement that bounces 2 fibs back in this direction, and then essentially holds about the 50%. Here, let's clear it out. And then essentially holds, let's see, let's make it yellow. Right, holds around the 50% retracement and then makes a bounce. You'll typically go back and retest this area. 80,000 volume. Oh my gosh, right here. All that hedging. Missed call.
Profit order filled.
Oh, I guess we could do this. Clear it up a bit. Hey, if it doesn't go here, you gotta get out. If it goes, that's fine. Let's see, stops above 99. Let's see if the footprint shows that. 99. Semi-incomplete auction right here. 98.75, 99. So we're coming up on it. Did volume build enough? We'll see. There's 99. It's alright, I'll de-risk some happily.
Stop filled.
No, I want to be 5 contracts long. Volume building here at 98.50.
Stop filled.
Some folks might
Stop
think they're
filled.
running into a wall, but it typically expands a little bit.
Profit order filled. Profit order filled. Profit order filled.
Oh, still unfinished to the upside. Let's move it up. We'll stay one long. Oh yeah, still unfinished. Where am I in the queue? 93. Okay.
Profit order filled.
That's fine. Move this one up. Let's go look at the footprint. Let's get the bar chart. We took all that liquidity. Do or die. I think it's coming back, so. But in case you want to go for the take a nice little jog here. ATR at 4.86. Fed talk in an hour and 10 minutes. We're grinding up on low volume. Pretty bullish. Hey, thanks 727 Skirk. I appreciate that. Trail it up. Only one left. Can I get 10 points out of that contract? That is the question. It would be a 10-point winner at the 0350. I'm so good at trading these short-term ranges that I don't always get 10-point winners. Like this morning, that was a good trade for me intraday because I caught so much of it. This is a nice breakout though. Even though it's not a clean pattern. I get it. If we come back to the 96 level, maybe I'll reload. Yeah, 96. This number here,
Stop fill.
there you go, that's fine. EP, here I'll show you.
Order placed.
See this EP 126? That means I'm 126th in the first in, first out CMEQ. Another reason to use Sierra chart. Is that useful to know? Sure. I think it stands for expected placement or expected place in the queue. So CME, you get filled on a first in, first out basis. Nice and fair. Unlike stocks, where market makers can front run you by fractions of a penny. And you don't have that ability, it sucks. Not in futures. You know, Joe Bob, I did a video on that. Let me see if I can find it for you. And it's going to be able to, it'll explain it better than what I can do here and now while I'm looking at the market. So let me go take a look. See if I can find it really quick. Let's see. So go to my main channel. I've got playlists. And I have one on in footprint educational. And let's see the playlist here. Oh, I have a deleted video. Another deleted video. Alright. It's probably my most watched video, or one of them. Nope. Jeez, where'd it go? Huh. Sorry, I can't see the screen because I'm on other screens here. Let's see. I think it's this one. Yeah. Alright, Joe Bob, here you go. So I'm going to turn off my desktop audio so we don't get any feedback. I want to make sure that that is actually the video. Let's see. So Joe Bob, at about 10 minutes in to that video link is where I start talking about auction theory a little bit. And it'll make perfect sense when you're looking at my footprint chart. Oh, why do I still have an order in there? Jeez. You know what? If you watch that video, Joe Bob, I think it'll make a lot more sense. Because it's not that complicated. And when you're looking at a footprint, here, let me turn off this. I've got this video. When you start looking at the footprint for short-term auctions, rotations, it'll start making a lot more sense. Especially if you understand how my footprint, um, what it's actually showing. So I don't know, maybe watch the whole thing, but if you don't understand my footprint setup, but around 10, 11 minutes is when I kind of start talking about auction theory. So it makes sense that if you don't know what my footprint setup is, then um, you'll be maybe a little bit lost as to what you're seeing. But like here, this is an unfinished auction, right? This is showing positive 93 deltas out of a volume of 227. So imbalance to the upside, there's no taper. If there was taper, like in this area, you see that this is positive delta, there's no negative number here, right? And it turns yellow when it's like 90% bid or ask volume at each tick, right? So that's kind of an indication of taper. It's a little bit of a short-term completed auction, right? In other words, not a lot of interest to buy or sell there. Just like a real auction house, right? When you're buying something and everyone sees value, there's a lot of transactions that occur, right? So people are seeing value, 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 and then boom, tapers right up to this area. Not a lot of short-term interest. So likewise here at the 98 handle, short term, we're talking very short term, not a lot of interest so far. I think, we're still chopping around here, and 10 to 11 o'clock Pacific Standard Time, which is I'm on the West Coast. It just tends to be a choppy zone, so you can't read too much into this right now. But you know, um, essentially, an auction. If you just think about a real auction, when you're buying and selling some commodity like cattle, and the cows get I don't know, say too fat or too skinny, and everybody stops bidding. There's just a lack of interest until you get back to the type of cattle that everybody wants to be buying and selling because there's demand, right? So the E-mini on short time frames and larger time frames works the same way, which is why, right, you get these buying tails, right? You get these single prints. You get the P shapes on market profile and the B shapes, and you get normal distribution, or you get the standard bell curve. That's because there's for that day there's usually an interest around a value area, or 68.2%. I think 70% market profile. They just round up, but so it's really just based around this idea that the more time and value, or more time and volume that is spent at a specific level, means that the market's valuing that area more. So you can, sort of short or play essentially mean reversion back into those levels when you see the market start to digest. And so we can see that right here, right? This is VWAP and 24-hour. So VWAP is your volume weighted average price, which is again just another way to look at value. And right, as we came into that zone, what did we see? Right, everybody became sellers. Right, it took a little bit of time, but in it's at the time it was also value area. I think value area high was right in this area too. So like value being, in terms of volume only, being this teal shaded area with these lines here. So it's part of the reason we had previous value areas that I took profit on my short at from 22 at 01. I took half, and then I took a little bit more, and then I took all of it off here at 80, which is uh, a volume, virgin or untouched prior point of control, or the highest volume area from a previous day. Okay, so I figured that was value, right? Point of control on volume from a previous day. And a lot of folks would, a lot of institutions would see value in that, right? So they all bought it. There weren't a lot of interested sellers below this level, and back up to volume weighted average price, right? So the time frame on my footprint is in is it's not time frame based at all. It's a point and figure. So that video that I linked you, I'll go over how point and figure works at the end of that video. So it's essentially when you, well, yeah, just watch the video. I explain it better there with examples. So like here, you have volume building with absorption, negative 224 deltas, negative 100 deltas. So this left column are my net deltas. This right column is my total volume at tick for this bar. And then the background here is just bid minus, or ask minus bid volume, or net delta, just graphically represented behind the actual delta. Just again, so that I can kind of see, hey, this is a bit of an absorption volume node area, right? You can see that there was this positive and negative delta, to the tune of what, about 130, 140 absorptive deltas here between this area and this area. So, if you were seeing this in real time, you would never be able to catch that there's an imbalance here. But because you can kind of look at it, you can go, oh, yeah, so someone absorbed 219 contracts at this level, and then they absorbed 224, and then another 100, and then 32, and then there wasn't that much interest to sell. As you see the volume taper significantly, right? You go from what, essentially 900 to 350 down to 32. It's like, oh, there's no interest to sell. So, right, the auction is completing short term here, right? Skinny or fat cows, to go back to the cattle analogy. And then boom, you get a nice push up, and then if you look at the volumes here, right, there's quite a bit of volume here. You would expect some sort of de-risking, 8 to 12 ticks up. So that's what you get. All right. If you say that the volume node, which is, point of control is here. It's a little lighter pink highlight. So point of control is here, right? So what's 8 ticks? Somewhere here, there's 12 ticks. So yeah, you're getting your typical 8 to 12 tick de-risking by algos and traders. So, 2 to 3 points. And this purple background just means that 70% of the volume of this bar transacted at those levels. So that's another way to see, like, on just a range bar point and figure like this, where value is. So for me, it just highlights the volume nodes, and then I can go, okay, well, let's say if I'm long from here or something like that, then maybe I want to be taking off 8 to 12 ticks up, depending on ATR. ATR is 4.5, so you can see that ATR's, well, if I had ATR graphically represented here, right, it would have spiked to like 6 or 7, and then it's just been steadily declining. So as it declines, where I'm going to take profit within a range is going to decline as well, and my stops are going to tighten up. But if ATR is really high, my stops are going to be wide, my position's going to be smaller, and then my take profit's going to be wider as well. So Although today, in this case, when I bought the 70, I actually got filled, I think 78 and a half or even 78, 70. I was right at the bottom. And then I bought some more right into 81. My stop was here. Like it was just right under this area. So I expected this sort of move here, this little balance area to push down and be a false breakout. So it worked out. So despite the volatility being high here, I had a thesis for this is as far as it should go, and if it goes any further, it's probably going to go down here, and I don't want to be long. I don't want to be long if it breaks this area. So I was willing to stop out, and then if it pushed back up, enter here again. And of course, could I have gotten chopped up? Absolutely, but it worked out this time. So you have another virgin point of control here at 55, 56, and then if you look at the daily, see, I'm getting sidetracked here. Here, let's get rid of some stuff here, making the daily charts look ugly. So that virgin point of control here at 55-ish would correspond with probably a bounce point here right at this area, this breakout point, right? So 53 to 60 something. So there's a virgin point of control here. So, if we hit that, then yeah, they'll probably run the stops a little bit underneath it, just because there will be tons of stops underneath these highs, tons. So will they probably push it down? I don't know, maybe even 10 SMA. Where would the 10 SMA end up, right? If we anticipated its movement, something like that. So yeah, anyway, if it broke this level, I think it would go to this level, which is 20 points of risk. Instead my stop was 4 points, and my take profit, I took profit at 4, 5, 6 points. So it's like 1-to-1 risk reward, but I thought it was a high probability setup, more of like a, for the context, maybe I don't know, right? I'm right maybe 80% of the time in that situation, something like that. So totally worth it. But yeah, I don't know. So yeah, massive sidebar to your question, but see, I'm using point and figure. One reversal after 12, like the literal definition is one reversal after 12 ticks. After price moving in one direction and then reversing 12 ticks in any direction. Right, so this is a red green bar right now. So if it opened up one tick and then it reversed 12 ticks, it would print a new bar. If it opened and went up 11 ticks and then reversed 12 ticks, it would then print a new bar here. If it opened and went up 11 ticks and then down 11 ticks and then up 11 ticks and down 11 ticks, it would not print a new bar. But if it went back up and then went back down after printing 11 ticks of range, even if it went back up, if it went back down and hit that 12th tick, boom. No, that's not right. It would have to it would have to, if it went back up, it would have to again find 12 ticks after reversing from a direction. Which is why you get, on point figure, you get bars that look like this, right? It probably opened, went down, probably pulled back, went up, probably pulled back from here, went up, probably pulled back again, went up. Right, and then once it reversed 12 ticks, 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12. See the new bar? And then this bar opened, whoop, moved up, what, 4 ticks, and then it reversed. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, so. And then boom, another new bar. Or, you know what? This bar actually went, because that was 11. And then it went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Then a new bar. Sorry, I had that direction wrong. Be nice to have point figures reversal dynamically adjusted to the ATR. I'm not sure what you mean by that. I think I know what you mean, maybe. Just that point figure is like a 3-point reversal, so that so let's say if ATR was higher, you would and you wanted to base it off of ATR, you'd be like point figure 1-16 or something. And then if ATR lowered, maybe 1-8. Yeah, I see what you mean. I don't know. I think that's part of, so just dynamically adjusted automatically. Okay, that makes sense. That's why I keep ATR on my screen, because I do adjust the footprint. But by and large, there are a lot of patterns that occur on a essentially 3-point range of a point figure. So I don't change it all that much unless volatility just gets stupid, right? So because it's kind of like a moving average, right? In volatility, the moving average won't always be so important like the 10 SMA. But because you use it as a baseline and you don't change it to something else going with ATR, it gives you a good indication of how much more volatile price is and how it's behaving around that moving average. So it gives you an idea since you're not gives you an idea about the nature of price action since you're not changing your baseline. So it is important to leave things um, alone, especially when you're dealing with moving averages and I don't know, I guess even like bar charts and stuff like that. I mean, I could move to the 1 minute, but all my experience, or the vast majority of my experience, is on a 5 minute chart, right? So that's how I know my patterns. It's how I know my moving averages. It's where I'm most comfortable playing. So that and maybe a 30-minute time frame. Yeah, the more you dynamically adjust things, the more your brain is going to have to keep up with all of those adjustments. So there's a lot of truth to, keeping your trading simple, or your trading system as simple as possible for your capacity. So, because the more you stretch your brain and widen out um, your perspective on the market, the more challenging it is going to be to integrate all that information and then make a pointed thesis, right? One of the most important things about trading is having a good thesis and then being able to enter the market with defined risk, right? And using repeatable edge or using repeatable logic does do your thesis do your theses have have edge over time, right? And that's another issue. But the issue of entering and exiting the market just based on conviction is important too, because a lot of traders are just they're not able to keep up with the information in the market, and then by the time they finally decide, like, okay, I think I have enough confluence and I have enough confidence here, the market makes a move and they feel like they're too late, right? And then their risk reward is poor. So it's important to have a system that you can keep up with in real time, right? I'm all for multiple confluence, right? For entering in a position, but if it takes you too long to sort of aggregate all that information, decipher it, and then say, like, okay, yeah, this gives me a good signal, and it can be really problematic because you're going to feel like, well, I'm already too late on this trade. And then, if your stop is in the same place, then, as the market moves away and it becomes obvious to a lot of other participants, then it skews your risk reward. So, anyway, I'm repeating myself. I have been in this game over a decade, full time. Yeah, this is like watching paint dry. But I like that the market is compressing. And then JPOW speaks in about 40 minutes, 39 minutes. About 39 minutes. You guys can't see it. I put a new undo arrow up on my Sierra chart. Found something I liked and replaced the default, the out of box Sierra chart back arrow. I think it's a lot better, a lot more clear. I don't know that that's encouraged by Sierra chart to replace graphics for certain buttons. I perused their support forum, but I didn't find anything. After a few minutes of looking, so, but 8 months old. Oh, that's cool. Right on. I I have used TraderView before. Now I just use a nice little Google. I don't know what it's called. Google Sheets or whatever. So I keep track of all my P&Ls from multiple accounts, and Yeah, just journal my trades. In Interactive Brokers, I use their journaling software for trades. So, and it's really fun to go because well they allow you to screenshot the chart, and so I put notes along with the chart, and it's pretty interesting to go back and look at old trades, especially when they're from like 4 or 5 years ago, and you're like, I was just thinking about AMD, right? I was trading it on a daily time frame. Like it looks over baked here. That was like $40 ago. Says something about trend traders, and it's amazing to me like the Larry Tintorellis of the world that trade trend and stay in these trends for a long period of time. How they're able to stay in positions for so long. I have a much more difficult time with that, and I'm successful at it, right? Like my IRA trading account this year is up, well, year over year, so 12-month rolling period is up 40, no, man, like 40, let's see, I'm trying to work out the math in my head. Like 50 to 51%, right? So, and I just, yeah. And of course, my wife, she has her own IRA account, and it basically trades like mine does. She initiates the trades that I do. So it's up as well, which is a lot better than, you know, 7 to 12% that you're going to get from managed funds. And it trades on a short time frame, like a 1 to 5 day time horizon. Yeah, thank you guys. Let's see, do you tag any analytics on your trades? You mean within Sierra chart? I'm just trying to understand your question. Lucky Prod, you ask, do you tag any analytics on your trades? Maybe you can be more specific. Hey, volume building up here in the 0125s with a little bit of absorptive imbalance. That could be initiative traders, but it's a tough spot, isn't it? Right? Because we're here. So I would expect there are stops at the above this trend line, but there's also yesterday's close and T plus 2, which is where a lot of hedge funds and institutions sold off. And maybe they sell again. Who knows? It's a tough spot. But you know, like this pattern here is like really Adam and Eve, right? I don't know if you've heard of an Adam and Eve bottom. Here's the Adam. He's pointed. The Eve is nice and curvy, and it makes a higher low. Right? This saucer kind of shape. It's typically good for some nice upside. So just the shape suggests more upside. On low volume, see that? So price is naturally pushing up on this low volume. So once it starts to take off with negative 20,000 cumulative deltas, so if it moves, we might have one of those, you know, on a higher time frame, maybe a 30-minute chart, V reversal kind of days. Oh yeah, no, I don't look at that. I don't add anything like that. I don't use the text tag in the what is it? The trade window. I did at first, and now it takes me too long. So I have everything centralized to Google Sheets. But I do look at the trade log, and look at the statistics because Sierra Chart just does a bunch of cool things. So I have a document that I've spent a bunch of time on that basically shows me what my A++ setups, and I have like 40 unique trades that are A++ for me. So um, I kind of know based on confluence of a host of things what when a trade is A++. So they all don't have unique names, but when I see certain combinations, um, I know that I've gotten into a trade that has a lot of confluence, and it's like includes a bunch of sentiment and chart patterns and TPO and trend lines and moving averages and footprint. When I get a confluence of those things, because I've written it down and defined it in my mind, it's very clear. It pops out right away to me. So I've made myself intimately familiar with my setups. So I don't know. I People talk about win rate, but for the last year, my win rate's 90 year over year, 90.25% on 1-to-1 uh, R's. So 1 R basically. So your risk reward is what matters. So I don't want people getting too hung up on that. Personally, you can talk about win rate all you want, but if your risk reward is zero point 0.2, your win rate better be damn good. And then psychologically, as a trader, you better be as tough as nails, knowing that your big losers are gonna, fuck you up psychologically, and you have to be able to get over that quickly. And I just find that most traders cannot. So high win rate and low reward over the long haul is too stressful. So I go for A++ and about a 1-to-1 risk reward. Like you could see earlier today, my stops are 12 ticks and my take profits are 18. So what is that, 3-to-2? So, or 4-to-3. So 1.25 R's or something. I don't, 39.20. I don't know, maybe. The Fed is, the Powell's going to be talking here in 30 minutes. So if you're asking my opinion, it's a toss up. There's going to be some volatility probably, though. So had a nice flush here, 80,000, 87,000 contracts here on this bar. And you have to ask yourself, who's de-risking here, right? Why is there all this selling? It's under T+2. See, I already went over this morning on my. But man, already discouraging myself because I talked about this at length this morning that it never got recorded. So you have to ask yourself, who's de-risking underneath this point, T+2, right? It's institutions. So Do short-term traders get caught up in this? Absolutely, right? Have they de-risked enough here? That is the question. So if we come up to this point and then you just see boom, big sells, big sells, big sells. The market, it might take the market some time to digest all of that. So it's it's a little tricky because you have T plus 2 and yesterday's close here, right? If T plus 2 was down here and we were already above and we had the same pattern going on, then I would more confidently say that we're probably going to target this area, right? Just as a take profit, right? You just have some poor structure here. You go look at your TPO. You have singles, right? So 39.17. I would say like, okay, uh, you know, let's let's go find some liquidity. But yeah, we are one time framing up, so you know, go with trend. There's stops right here above '05. So is it likely we go find liquidity into the top of value at least? Yeah, probably. So that's 2 points. But if you enter here, where's your stop? What, underneath this low? For what? Top of value. So if you enter here 0350, your target is say top of value 3 points. Your stop maybe is under the low. So it's a 1 hour trade. But am I entering here? No, because it's not A++. Is it more likely to move up? Sure. But I've already taken my A++ setups for today, so I'm happy to just stay out on all this chop right before the Fed. I ain't a gambler. That's just my trading style. Honestly, to be successful in this game, you have to you have to just sit it out when you don't have edge, right? I mean, if you have like, well, I missed this last night. I tried to get in at like 14.15, but I missed this move. I did short 21. I got filled at 21.50 here, but I scalped out and was out at 19 and a quarter. So I am playing a little bit here, but I'm not holding with much conviction in this kind of move, where it just grinds up into this trend line and into this resistance zone. But on a move like this, yeah, enter with conviction and hold the trade. And hope you're right. Here, let's see if we can see. Let's see how far does this chart go back? Only 10 days. So let's change it to 30 days, 30 minutes. Because I have so many volume profiles and delta tools and all of this stuff in here, I only keep about 10 days on my working chart. So we'll go back to 30. Let's see how long it takes to load. 10-15 seconds or more. Let's see. There you go. Look at all those VPOCs. Jeez. Peter Resnicek loves to point out virgin points of control, but I don't find them to give me that much edge short term. It's just when we get to them, then they become highly reactive areas just because volume transacted there before. And you know, people love to hold underwater, especially arrogant rich people. And we're all human, so when it comes back down to that area, what are they going to do after sitting through so much pain? Probably take profit around. On their short, a few ticks below. Which is why you get the VPOCs, they get violated and then they bounce like a motherfucker. Sorry, excuse my French, but I curse like a dirty sailor sometimes. Welcome to trading. Rick D, I've got all kinds of stuff on T+2 on my Twitter. So I won't go over it again today. At least not here on YouTube. It's just, God, I spent so much time on it this morning. And thank you, Rick, for pointing out that or asking about my mic. But man, that was like a kick in the nuts for me today. You know, Rick, I don't know that you're going to find much on T+2 on Google, but again, my Twitter account has a lot. If you go into Twitter and wow, man, I can't even remember what the format is. It's something like maybe if I start typing it, it'll make sense. Parentheses from colon at trade underscore your underscore plan in parentheses and then T+2. Let's see. Yep. Okay. So I'll just paste. So type that into the Twitter search field. I'll put it on my screen for you. Actually, I'll just put it. Yeah, like that. So type that into. Oh, okay, Rick. No worries. I just didn't know if you. Yeah. Okay. Never mind. So the way that my Sierra chart works for extending these lines is that, and this is part of the reason why I have a separate volume profile for evening and for day. So the day is teal, the evening is purple. Is that it extends until another regular trading hours session violates it, and then it doesn't extend. So this is value area high, this is point of control, this is value area low from this day. If you use a single volume by price study, it's going to include when the evening punctures it as well. And it's more important to extend it and keep it extended unless it's violated in the regular trading hours. Right? So that's one way to get Sierra chart to do that, is by having a separate volume by price study. So that's part of why my charts take so long to load sometimes. It's because I have all these different studies. So look at that on the 30-minute bar. There's the excess. Here's short-term value. So I would look for just based, well, JPOW coming up in 16, 17 minutes. So volatility could get really fucked here short term. That's why I'm not going to play. But if he wasn't talking, I'd probably be scaling into a short looking for, I don't know, return to 97 98, something like that. And I would enter on any little stop run here as well, with probably a stop at around t plus 2. Because we've got the previous close here, and then t plus 2 as well. That said, t plus 2 did not occur on volume, which is what I was mentioning in my Twitter, right? That bodes well for the bulls, because if this occurred on volume, let's say 70 to 100,000 contracts, right? They would all be underwater. But this was on, let's go back to a 5-minute. Well, let me first change the chart settings properties down to 10 days, and then let's go to 5-minute. So if we look back at the volume that transacted on t plus 2. Oh, yeah, you're welcome, Violent Cop. I hope that it works for you. I mean, I don't know. We know how finicky Windows is. So hopefully what I showed you there worked out well. I know people have some reservations about downloading things like Ultra, I think it was Ultra UX Theme Patcher or whatever it was. I did, so I did a lot of searching through forums if it was safe, and of course at the end of it all you don't really know, but so everybody should do their own due diligence. So anyway, where is 2? Let me back up here. Where's 2 plus 2? You know what? Let's just grab this. All right, probably going too far back. So t plus 2 is here on, what is that? A 5-minute bar, like 50,000 contracts at the close. So it's not high volume. It's just not. So, yeah, if there's good news, we might just push up. It'll be resistance probably short term. So that's why it's not a great trade for me. If this was high volume here, it would be a nice short. But, you know, if you put a magical Fibonacci, 61.8%. It's a nice spot for reversal. So, and it just happens to coincide with t plus 2. So do I think that this will be a reversal point for some chart points? I don't know. Maybe 5 to 6 to 12 point reversal. I think it's very possible. But is it the perfect setup because of the closing volume 2 days ago? No, it's not perfect. Hence why I'm on YouTube talking about location and all of that. Otherwise, hey, we're all in a competition together, right? We're all just sitting here playing cards. So let's be real. If I was absolutely entering on size, I wouldn't be telling anybody. I don't know if one of you will front run me, so that's just the nature of the game. Rule of 3. Here we go. Uno, dos, tres. So is there liquidity? Yeah, there's liquidity here. So typically, if it bounces before the trend line, then shorts will be in trouble. But if it and then we get a move up. But if we hit the trend line and then mess around a little bit here, then we'll probably get some push down to at least point of control, I think. Here comes the Fed. What, 12 minutes? 11 minutes? Let's see. Open up my handy dandy Econo Day economic calendar here. Yeah. Let's see what the consensus is for this Treasury statement. Oh, it's going to be all kinds of stuff. This is what I'm looking at. Econo Day. By week. Oh, there it is. Pierce it. Pop that trend line like it's hot. Let's see if it comes right back into. I'm expecting volatility around this area. Watch it pop back up to the upside here. Let's throw a few contracts into the pot here. $10. Yeah, I am a fan of Sierra chart. Quite the fan. Let's see. Right. Some people might say, well, why did you take profit before 1-to-1? This is like a higher than 90% setup here. So the stops here are just like black swan protection, I guess you might say. I probably win on this setup more than 95% of the time. And was I patient enough? No, it's probably going to come back through the trend line. Stop, everybody. You get a little wick to 0150 or something. And then chop around until JPOW speaks. Let's see what happens. Yeah, 0150. But let's see if you drew the trend line very precisely, which did I? Nah. Are people freaked out right now trying to control risk? Yeah. So are they going to be drawing the trend line very precisely? Probably. Let's see. The more people freak out about risk, the more precisely they draw the trend lines, the more they get boned. Yeah, see. So already got him here. All the short-term traders. So that's a nice little setup right there. Rut-row. Failed breakdown. Do you go long here? That's the question. Not I. I look for more velocity on a failed breakdown, so you get like more of a and then you look at the footprint and then you see some taper to a completed auction, and then it gets bought up very quickly back through the trend line. And when it moves back through the trend line, it doesn't hesitate like it did. So it might go to here. And then any pullback, I'll just be supporting the market. Buy, 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 buy. And that's an A plus long setup. But again, JPOW in 6 minutes, so that's the context. You don't want to be just entering a chart pattern or a setup and then ignoring all of the news or the potential for volatility and then just completely get chopped up. Because dynamic large traders, they will sell this down to this area just to find liquidity and then just buy it back up and keep buying and buying and buying and buying until they pop all the stop losses, and then the natural sellers, all the short covering will occur through this area, and then they'll sell into it. So on a day like today, the dynamic traders come out to play. And I'm not sitting on Goldman Sachs's desk, so I don't want to play that game. No thanks. Don't want to get run over by the tide. What is up, RJ? Your attendance makes me happy, my friend. I hope all is well. I haven't heard from you in a little while. So there's a little bit of delay here. I don't know how long it is. I think it's probably 8 to 10 seconds or something. I don't know. I could do the super low latency. I've got the internet connection for it, and then it's only like 1 or 2 seconds. But then you guys are going to compete with my scalps. So that's not fun. Delay is 1 minute. Ooh. That's crazy. Oh, someone doing some sweeping, I think. Let's take a look here. Right there. See it? Bid ask stayed the same. Price moved up. So someone swept the book here. I saw it on my time and sales because of how I have my time and sales set up. It was in one of my tips and tricks videos where I talked about time and sales and how you should aggregate your data so that you can see things like that and that it approximates your footprint a little bit more. So I was just able to see it in my time and sales. And I have time and sales giving me a nice big highlight when contract value of 25 or greater comes in. So if you set things right, you can see things like this that I explain to people that you can see order sweeping books on bookmap, but you can also see it on time and sales, which is why I've got that time and sales there aggregating data the way I do. I don't see orders of ones and twos. I have it set to same price and type combining of records. So what that does is it's essentially giving you the cumulative last sale, right? And so if you know what that is in Sierra chart, then you know what same price and type is. Type meaning a bid trade or an ask trade. Right? So if something sweeps several levels of the book, right, and it's combining, you're just going to see 3 or 4 ticks. In this case, I saw 3 ticks, um, all with greater than 25 lot, and it was all aggregated together. So I knew that it probably swept 3 levels of the book. And what did it do? 1, 2, 3. So time and sales told me that. Where are the size traders hanging out? Let's see. Yeah, nothing on the book all the way down to 38.70. Nothing. And J-Pow, here we go. Oh, I love it. Stops. Stops getting hit right there. Swept the book to the downside right here at 99 to 98.25. Let's see how much movement they can produce before they take it in one direction. And let's see what J-Pow says. Let's see. uh, so I'm teaching my kid to trade, and he knows what green and red means. And the way my time and sales is set up right now, my kid would be like, "Daddy, there's a lot of buying and selling there," and he'd be jumping up and down, all excited. So, oh, that's cool. Yeah, I mean, hopefully it's useful. Most of what I'm going over on YouTube is not all strategic and specific setups. Most of it's pretty basic, but he is awesome. He uh, ran into our bed last night. Sorry, just on a little aside here. He ran into our bed last night, and I was trading at like 12:30 my time, so 3:30 a.m. Eastern. You know me, I'm a bit of a night owl, and I just went in and checked up on him because he left the door open to the master bedroom, and he wanted me to hug him and hold him, so he ran to the bed, jumped off the bed into my arms, which I just caught him. It was super dark in the room, but anyway, he's like, "Oh, Daddy, you're strong." And I was like, "Yeah, I'm strong, buddy. I love you." Like, okay, time to go to sleep. And he's like, "I want to sleep in my bed," which lately he's got his own big bed in his room, but halfway through the night, if he wakes up, he comes and sleeps with us, which is fine. You know, he's only 3, and I'm appreciating him sleeping with us still. He's at that. He's still small enough. So he said, "Daddy, you're strong." I go, "I am strong. I'll take care of you. I'll put you to bed now." And then on the way back to his room, he said, "Daddy, I'm gonna get big and strong one day, and I'm gonna hold you and carry you." The darndest things that kids surprise you with, man. It was pretty stinking cute. So he slept in his bed for another hour or two, and then I went to bed right after that. He found his way back into our bed. But yeah, he's his ideas are becoming a lot more complex. Strong hands, dad. Yep. Sometimes, I don't know. Sometimes I'm weak hands. See, look at all this chop. What are you doing to yourself if you're trading this? Throwing money at the slot machine? No thanks. But if you find yourself playing on such days and it's super appealing, then you may have a little bit of a gambling problem. If you get excited on Fed days. So you might have to check yourself. Just think about that. Be aware of it. Because trading is about defined edge. It's not about gambling. So just be aware if you're more excited on Fed days because of random movement. Are you normally playing with that much edge, or do you just scalp mean reversion? Because over the long haul, that tells you something about your trading style. So be aware of it. Lucky Prod, you're going to make a kid one day? They are challenging. Especially 0 to 1. Holy cow. Do it with the right person. That's the best advice I can give you. Because there's all these variables. We're talking about kids. Don't know what you're going to get. What does Forrest Gump say? Life is like a box of chocolates? Well, that's shit. That's what it's like with kids. You never know. I'm waiting. This pool on Twitter. Oh, I see a message here. By the way, RJ, did you see I said sell Bitcoin? 47K? I said sell it. You make a bad decision trading but still come out ahead. How do you feel? Yeah, right? It's the same thing. Same idea. I don't know what Bitcoin is at. Let's see. Where is it at? 45? I'm looking at Bitcoin on the CME box of chocolate. Man, you guys are, this is way delayed. Yeah, I have Bitcoin on the only exchange that matters, really, which is not the CME. Let's go look. My shortcut bar on my browser is super cleaned up, so it takes me a little bit of time to open up stuff. Okay, Bitcoin on the only exchange that matters is, well, it hit 43.7. Did it? Oh, it's 43.771. That's at 44.941. So a few thousand. What's a few $1,000 for Bitcoin? It's nothing. Still. You know, some of the whales are licking their chops at all the Elon degenerates lining up to buy Bitcoin at 48,000. Just how long can they distribute it at that price? So how much can they sell, essentially? MicroStrategy, yeah, like short term, but that's volatility. ATR is only, it's under 3. So, you just adjust your stops to ATR, do reduce your size, right? So that your risk as a percentage of your account is no more than whatever you define, 1, 2%, whatever it is. And then for your stop, for your entries, do risk or ATR times, I don't know, 1.5 or 2, just as a general rule of thumb. Or look at your footprint and see where the volume's aggregated and use that volume aggregation to protect yourself. So here you've got volume aggregation here, right? So stop maybe goes above it, right? So Who cares about an ATR based stop, right? Make it a little bit more precise. But if you don't know how to do that, then make it an ATR based stop. Miners be happy campers, yeah. Yeah, yeah, nice range play. If you look at, well, let's see if I can post a chart. Let's see, I would have to do, yeah, I'm not going to post a chart. Yeah, it's going to show too much. I don't want to do that. But I'll look at it and talk about it a little bit. Let's see. Yeah. Yeah, I mean long 40 to 42. Take profit 45, 46, something like that with Bitcoin. And we're talking about a daily chart here. But you do run the risk of longing 41.42 if 41, let's see. If 39.3 breaks on volume, then you're going for a ride to at least 29 or 30. That would be my guess. And if if price goes quickly to 29 or 30 and you get a bounce, the rollover takes you below that. So yeah, I know this is not popular, but I've traded Bitcoin in my life, folks, and been successful at it. This is just how it moves. I'm not a bag holder. So you see someone cleared the book here. And it's probably going to show up on Bookmap. Yep, right there. So you see the best ask, best bid, it doesn't move, okay? So when you add that line in there and you get that gap, you know that there was what? A big market order that swept every single level of the book in real time because it what's the timestamp? 11:08:04, and this is, oh sorry. The timestamp is 11:08:09 and it's 11:08:09, and if you look at time and sales from here to here and you add microseconds, you'll see that it's like 0.00001 second apart. So hence a big sweeping sell right here. You're talking in bear, I know. That's the risk reward though. I mean, what, Bitcoin to 100K overnight? I don't think so. Where did Paul Tudor Jones buy? 3 to 8K? And when did he announce it to the world? 12, 15K? So him and the boys have been selling into all of this liquidity. Now Elon, I don't know where he bought, but I doubt it's at 30K. Even though Reddit suggests that, I doubt it. Yeah, it is stupidly cool. That's why you just add this best bid and best ask which is red, best bid line. So it gives you an idea that there was some aggression. Because a lot of people are like, the way that most programs track large orders is that they track it at each tick. So there'll be like, an indicator here, and then another indicator here that was a big order, and another one here, and then another one here. And so they don't really know that this was one large sweeping order, right? And so they put like a large volume trade indicator, like all these little dots are, buys and sells, right? And so they don't realize that, you know, this is just at one tick, right? It's not capturing a large order that sweeps several levels of the book. So when you add your bid ask line like that, this is one way for you to see that. And there are people, I'm not going to ruin their business, but there are people who make a living selling charts that show you this. Okay, so do their charts, maybe look at time and sales data and try to recombine it. And maybe is it a little bit more accurate than this? Possibly. Um, so are you getting a little bit more for what you're paying? Yeah, it's possible. But are you essentially seeing the same thing or something similar? Can you know without a shadow of a doubt that this was you know a book clearing order just using standard tools in Sierra chart? Yes. So I'm not going to get into a pissing match with someone over that, but because again, people, it's for some folks, it's their business. I know of more than one person selling chart books or chart book subscriptions that show you this stuff. Not a lot of action. Not a lot of action. Man, all of that volume aggregating under yesterday's close. Smooth. Do we get a J-Lo? The J-Lo is a little bit memeish. When things become memeish and a little too popular, they don't always play out. Have you guys ever asked yourself, why do all these prop shops and prop firms have all of these YouTube channels and they don't sell. They freely share a lot of their strategies and information. And yes, they do have subscriptions where they go into more detail. But you ever asked yourself why they share all that information? Is it just to hook you? Or do they also realize that the market changes and that they recognize that they have the competence to change with the markets? So if they share an idea and the market changes, they're already changing, and that a lot of people will be static with those ideas. So the real key is, from my perspective, is learning to be critical in your thinking with the markets. Learn how to uh, change with the markets and see what the markets are doing. And that is the kicker. That's why a lot of folks are not long-term successful with the market, because they can't keep up with the data and with the markets changing. It's kind of why I don't mind sharing a lot of what I know, a lot of the tools that I use, because the value for me isn't in all these tools. It's, yes, there is value. It's, it's the lens by which I look through the market. It's how I measure data. But the value is in aggregating all of that data and then making a decision, and then recognizing that markets change very quickly, and that it is a game. That's where I find most of my edge. I had a friend I had a friend of mine ask me that the other day. Why do all these prop shops and why do they give all this information away for free and not worry that they're going to lose their edge? Well, it's because they're going to adapt very quickly. It's kind of the unspoken uh, unspoken rule, or unspoken understanding. But these managers all discuss it. I've thought about it, so if I've thought about it for myself in sharing what I share, and I know a lot of what I share has edge for the context that I'm sharing it, then don't you think these guys have R2? Right? We're all in a competition. It's just an auction. All right. I actually think we're going to go explore. Let's see if we can make this look nice. I guess not. I don't know. That area at some point. Again, if you were listening when I was talking about this chart and all the virgin points of control that exist here at the 55 level, and then this trend line, and then this target zone. I haven't eaten yet. It's been 6 or 7 hours. I'm slowing down. It's likely that we retest this area at least. And if you look at the TPO on a weekly, this is a weekly composite TPO and volume chart. This right side's volume, and this is time. We haven't spent a lot of time in here. We did reject today here, where we spent a lot of time, so that's telling. So not a straight shot to this area. But we are finding value on the weekly here. This is this week. 91 to 10. Where are singles? 17. Where's 10? Right here. above T plus 2. So, I don't know, a little foray into T plus 2 would not shock me if the market tests. But right now, lower highs consecutively. So we'll see. Oh, I wonder what book map shows. I saw something on my time and sales. Nope. Fully absorbed. Someone tried. Hey, good night, Violent Cop. Thanks. Appreciate the nice words. Hmm. Yeah, what a snoozer. Everybody likes to use breath for the nicey only. I have it up here as a sentiment indicator. The more accurate is the nicey NASDAQ. Oh yeah, go for it. What did J Pow say? So you see how quickly that gets sold down into yesterday's close? Yeah, look at the volume. See that? This got all the shorts spastic and scared, but they are selling into it like you would not believe. So look at the volume. Thin book. Didn't have to spend much to get it up here to sell. So volume, or just a price spike on low volume, and then boom, distribute right into this. So someone's buying, obviously, but someone is definitely selling as well. Look at that. Institutional selling. I'm just listening to J Pow at the moment. Come on. Come on. There you go. Yeah, I trade with oh yeah. Oh, yeah, I trade with AMP and Denali, and one of the reasons you use Denali over CQG or some of these other um, data feeds is because with Denali, you get server hosted bracket orders, meaning if you put a parent in and you have two child orders, a stop loss and a take profit, the stop loss and take profit are both hosted on the servers, whereas if you use CQG and Sierra chart, the parent order, when you enter it, goes to the server, but the child orders are locally, meaning your Sierra chart platform uh, is managing the stop and take profit. And so if you have a power outage and your computer goes down, your protection is gone. Whereas with Denali, it's server side hosted. Yeah, I mean that's something you want to look at. If you're serious about your risk, there has been times where you know, hold on, J Pow is too loud. He's overwhelming me here. Okay. There have been times I live here in California where we have rolling blackouts, and dude, it sucks if you're using Sierra Chart and you don't have server side orders, and the market makes a big move. You know, you're stuck if you're in a position, and you have bracket orders that haven't been sent to the server. So it is something that you should look into on any platform you're using. I mean, a lot of these, I would say, non-professional platforms like interactive brokers for futures are all going to be server side, but they're also going to be pretty slow because of that. So, you know, HFTs are going to eat your lunch on low time frames. But not so with Denali. So if you're a scalper, you don't want to be using something like Thinkorswim or I don't know, a lot of these other places. Oh, who goes long after a big impulse like this? Who does that? Jeez. What shitty risk reward. Yeah, I know. That's why I use my footprint and hopefully effectively to scalp here. You see how this volume builds at areas? I probably took profit a little too early, but that's okay. In and out, change with the waves, time it with the tide. This is who you're competing against, big firms, hedge funds that are like, yeah, we're gonna eventually gonna sell around 4K, so we can just use that margin and put the sell orders on the book. Just leave them there. A few hundred contracts, no big deal. Think about all the margin that it takes to have all this liquidity up here. It's like serious God money. It's pretty crazy. Hey, if it comes down here, I want to cover my short. I want to cover my short if it comes back here, or I'm going to buy, right? Oh, we know there's a VPOC here. There are the bids, right under the VPOC. Is that VWAP on a year-to-date basis? I don't know, maybe. While the market works itself out here, I like to go distract myself. A bit of an unfinished auction up here. And liquidity up here, just waiting. I don't know. Might be. We got singles to 17. Bunch of negative deltas all the way up to 20. We probably flushed overnight inventory. Extended trading hour volume point of control. That's what that stands for. But will there be some holdovers? I think so. Look at the absorptive deltas right on the value area low. TPO value area low. Not volume value area low. This is TPO value area low. Volume value area low is 86.50. So we've got a node of volume here. We are in an LVN here, right here at 1175. So longs will take some profit, which is what you see here. One time framing up. Low volume node here. There's singles and extended trading hours or Globex here. Again, LVN. In the regular trading session, price moved right through it like water. Little bit of volume in that LVN, but it didn't hold up, did it? So are there longs here? Looking, there are probably longs still trapped here at 1350. That'd be my guess. So one hiccup along the way. What is it, 1150 or 250? So 3 o'clock. Get a little burst here. L period. As you can see, I closed my short. I saw unfinished auction, not enough taper. But, was trade location good? Yeah. So what Linda Rashke says in New Market Wizards about, good trade location allowing you to be wrong and get out at around break even. Now, did I get out at break even? No, I made money on it, but I recognized I was wrong in here, which is why I started covering. And that's why location, location, location makes all the difference. Where do you think there will be a reaction? And then where do you place your stop? If you can think that way rather than taking breakout trades all the time, you won't get so chopped up on your losses. And then you just have to have the experience to know what's happening here. And that's what I was talking about earlier about edge, right? And that successful experienced traders will know when the market dynamic, the context is changing, whereas, someone who just learns static setups because they were taught something on a YouTube channel is just going to be going like, this isn't working. I'm just getting chopped up here. I follow all the rules. Well, the market gave you real time uh, information. So, and family is coming back, so I'm going to step off the mic for a little bit, get some food, and then I'll be back. All right, I'm back. Can't believe my kid doesn't want chicken dumplings. Steamed chicken dumplings. Picky 3-year-old. All right, Golden Rose, above 14, and you imply it's over for Bears. Let's see. Oh, there's some volume. Rick, I run some Samsung curved monitors, 24 and let's see, what is this other one? 27-inch. And then as far as a computer goes, I don't know. Some company by the name of Cyber Power PC or something like that built it for me. I don't know what the specs are anymore. But if you're going to run Sierra chart, oh, that's cool. 49-inch. So is it that Samsung 49-inch? So I have a sad face for not filling. Oh, LG. Interesting. In terms of running Sierra chart, they have requirements on their website. That's like, yeah, I don't know. You can look it up. I just wanted to scalp initially right at that level, but I never filled on contracts 2 and 3, so whatever. See the tight stop? Because in that case, I didn't want to stay short above 14 and a half. Oh, that's interesting. Yeah, I have two gaming monitors. They're Samsung, curved, which those are really nice. The refresh rate on them is high and all of that, but I've had problems with the monitors' power supplies if they're too close. They cause a little bit of harmonic interference, and you get a little bit of fuzz or a lot of fuzz, and they become unusable. One of those monitors is actually sitting, or no, it's not in the office anymore. It's in the garage in a box. But yeah. But my bigger monitor is not a gaming monitor, and it's more responsive and less issues. The Samsung gaming monitors that were like high definition, extremely black blacks, etc. Just it's like a first generation monitor. The bought them a few years ago. And lots of problems. Wish I would have stayed long, but oh well. Anyway, mic going off for a little bit here because I don't think you guys want to hear me eat. Insane. I was eating some chicken dumplings. So good. Really? That's all I get? 1, 2, 3. It could be. Where are we at here? 1075? Okay. There you are. Okay with being wrong. A matter of fact, totally cool with it. Man, I trade all kinds of stuff, but the only thing I talk about is the E-mini. Well, once in a while. I'll post something on gold or the dollar. And I trade stocks. Some days I only trade stocks because they're the way that they move so much easier sometimes. Good entry. We'll just de-risk a little. No worries. There you go. You either go or you don't here. That's okay. I don't trade stocks through Sierra Chart yet. I trade stocks through interactive brokers, but it can be integrated with Sierra Chart. There's some problems with that though. And I always use stops and stuff like that, so you can read the documentation on interactive brokers with Sierra Chart. It's quite it's quite the undertaking. But now I just trade through Trader Workstation. It works. Eh, little bit of liquidity here. If we drop back another point over, probably for short-term bulls. So let's see if there's interest. Yeah. Let's see. Oh, Violent Cop was from Vietnam. That's right. I was thinking you might be, or Lucky Prod, you might be from Vietnam. In which case, I think you could trade through interactive brokers. But I would recommend them as opposed to some of these, the Robin Hoods. Oh, quickly bought back up. Interesting. Um, Robin Hoods and TD Ameritrades, E-Trade, Webull. All these firms are just selling order flow and only working with specific market makers a lot of the time. So they're directing your trades to specific market makers for uh, poorer fills on orders where you pay the spread. And that could be significant when you're trading volatile stocks or options, stuff like that. So my recommendation, pay for commission through interactive brokers. All right, well, see what it does. It turns into a little trading range. No big deal. If we tap this 10 SMA a second time and pop off of it, then we probably go. You don't want to have a consolidation, a breakout, a tight consolidation, and then it pulls back, it traps some shorts, and then doesn't go. That's just experience talking, but could it still go? Absolutely. But does it turn into a worse setup if it doesn't go? Yes, which is why I stop out. If it turns around and goes, fine. But it's just not good structure. You're with AMP for learning. Well, I'm talking about IB for stocks. You can't trade stocks on AMP, right? It's just futures. Dump it. Let's see. Huh? Dumped into liquidity at 39.10. It's all right. We'll give it a shot. Let's fight for price. Come on. If I don't get it, that's okay. I'm okay with stopping. 1, 2, 3. Where's my break even point? About yay? Alright. Let's see what we got. Looks ugly. I'm paying AMP. Pay those commissions. Pay them! Little bit of liquidity at 12. Not much. If this market is strong, it should rip through that like nobody's business. Yeah, stops right up in there, so why not? Why not get the stops here? At 12. That's alright, we'll stop. If you don't get them now, come on. 55 contracts left before I'm filled. Yep. Someone swept the book on a sell. 2 tick. Let's see. Does it show up? Not really, does it? Yeah. Oh yeah. At 11:25. Oh yeah, they're hitting the bid. And that's getting refilled. We've got absorptive deltas here. Excuse me, a little bit of volume. We had someone down here, iceberg filling here at the low of this bar at 39.10. And now we have absorptive deltas here. So, it's alright. Let's see what we got. Let's fight for price. Right, we see what's happening under 10. So if 10 breaks, we'll probably get some movement, but we had a short-term completed auction here, not a lot of interest to sell. Nice absorption here, decent here, finished auction, finished auction. Yeah, could get some downside. Maybe 14 was the short, and this guy's just a short covering using an iceberg. See that? Cover, cover, cover. Let's see how long it takes to go through it. Let's say he's at 10. 150 on the bid. Let's go look at the bid market orders there. Let's see what appears as size comes in. Sometimes they use a slightly larger size than 1 or 5. I use something a little more. Alright, algos are getting jiggy. It's almost M period here. And that's alright, we'll flatten into 1150. Let's let the degens play M period, not I. Above T plus 2. So earlier, my short-term thesis is that, yeah, we're going to get above T plus 2. Here's the 200 period moving average, which often acts like resistance. We got this little LVN here, and then a larger LVN in this area, right, where the breakout to the downside happened. Trapping all kinds of buyers from here. See the volume node, another volume node, right? So these guys they're sellers in here. If we make any move below 0975, then they really start selling. All right, and then these were the shorts that were wrong short term. So they're looking to get out into the meat of the move, which is right in here. Oh, let's take a look. Let's do that. And oh, really? Jeez. You're really gonna do that to me, okay? Whatever. Yeah, the meat of the move is here. So we get a little bit of movement. Now longs are suffering back into value. Let's fight for price. Nope, I don't like it. Meaning I don't like not getting filled here as price moves right back up. I don't want to chase up and through this zone because resistance potentially is right in the tens. So yeah. Man, what a little bit of food will do after not eating. I guess my brain needs glucose or ketones if you're into that. Let's see. All right, let's go hunt for some structure to play off of. Okay, I like the 07s. And we're there. Fight for price. Ah, hesitation. Come on. Really? There you go. Look at those longs flush. 12:30 M period. What did I say I wasn't going to play? Here I am playing. You dumbass. What are you doing? What, the negative 30,000 cumulative deltas? In a thin book with volatility? Just shows that the book is thin and algos have control. We're going to add. Let's fight. Fight for price. Fight for price. There you go. Fight for it. Fight for it. Come on. Fight for that price, darn it. 10 lot right on M period. I'm up a hefty amount today, so what am I doing? Possibly pissing it away little by little. Maybe. I don't know. Oh, I shouldn't trade the close like this. So, thinking my weaknesses out loud here. But damn it, I believe in the trade. And I like the setup. I really do. The question is that too obvious to other traders as well here? Violating the 20. New trend. Longs are fretting. There's the start of the 80,000, 87,000 contract bar. We're into it. There's no coulda, shoulda, wouldas in trading. Guess what? I get to be flat. M period. And for stupid trading, I'm rewarded to the tune of some more points. But it tells you location is everything. You can be wrong, and I think I'm wrong. I'm wrong to be in at M period, which is just generally one of my rules. You know, you get chopped up around this area. So let's go look at the TPO. We're in M. M's probably going to go take out K, find stops, maybe some support at 0450. And then who knows? Maybe it goes and takes out singles too. And then it runs all the way up. I mean, who knows with M? Lady M is just something else. Which means you're probably wrong, long, Golden Rose, but I am not anymore. I flattened. I wanted to go short it right here at T plus 2. But M period. Let's see how she plays out. There's usually a little bit of volatility before we get a counter move. So I can be patient. All these negative deltas though scream. Squeeze them! So let's see. Hopefully that's not too loud when I say things like that. Alright. This will become the new trend line of note. In case we get near it, you know, some fuckery will abound. Oh, yeah. Those assholes. They're so good at doing that. I'm referring to Golden Rose's comment about getting stopped. See, this is the problem. Sometimes I'm just not patient enough, right? I had the thesis right, which is above T plus 2, a little rollover, but it took more time, right? We're zipping along here at an average of maybe 10,000 contracts over the last hour, 2 hours. Yeah, last 3 hours, 4 hours. It lulls you to sleep, and then you're not taking the best. You know what? This T plus 2 label's shitty. Let's go adjust that. I need to offset it a bit. I don't know why it's not working as it should. Let's see. Oh, it's not displaced. What's the other one displaced? Can't see it. The other one must be displaced by 10 bars. That's what I think. Okay. Let's go displace it by 10 bars and see what happens. There it is. Okay. That makes sense. I would use a whole number like that for 10 or something. So that's cleaner. Now we could see the price action better. Deltas. How many fib traders did they get today on this move? That's the question. So if you fib it out from the high in Globex, they got the 618ers, right? Oh, if it goes past the 618, it'll probably retrace 100% of the move. This is the old adage. Okay. And if we change it to the high of RTH, they got them even worse. So retail, only based on this one metric, is getting screwed today. So if retail is getting it wrong today, I'm going to say that we're especially in the path of most pain today. So the big boys are playing, hence why we saw this 80-something thousand contract bar. So the big boys are out and about. This isn't a just lull retail to sleep and give them all winning setups kind of day. So where's the path of most pain? Underneath this trend line. Go get them, M period. What is that? Stops K at 04, according to the TPO. Okay, 05. D might be support. Probably not. There's buying deltas here out of this base. So what? 01 maybe? Let's see. Oh, nothing. Just me fucking up some trades. Still winning, but fucking them up. There you go. Stops. Stops at 05. Look at some eager beavers trying to cover their shorts here. Bunch of market profile traders. Hit the ask. Hit the ask. All right. Go ahead. The algos sense it. Okay. Pool. They're pooling like a mofo right now. Pool, 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 and then foop, absorb as it comes back up. So the algos are winning. Short term, I still think it goes lower. So we're now one time framing down, maybe? Or is this just the M period stop? No, I won on all the trades, but I just realized in real time where I was wrong short term. So because I had good trade location, I got out. There you go. 0425. What's it look like on the footprint? Like that. Volume building to the downside. Got him. It's all right. We can scale in a little bit. Let's fight for price. Down in the 01s, I just talked about it. Hey, there's some taper to 53 contracts. Not a lot of interest. Okay, did they get them on the trend line? Yes, they did. Point of control right here. Delta's massively to the downside. All right, back up we go. Did M period do its job? That's the question. And you missed me eating chicken dumplings, although I didn't do it on the mic, I hope. I have this little button that turns off the mic, and I don't know. With how I've been with technology today, I had a nice early morning rant on a nice big off after a nice big cup of coffee, and I didn't have my microphone on. I was just so pissed about it. It's like a 25, and it was a man. It was a nice rant. I went over why I took the trades that I did today and why I thought they would be successful in the larger context of trend lines, daily time frames, fund flow, T plus 2, and I guess volume profile. So why I covered where I did. Did not short the top, did not cover, well, I covered some near the bottom. Um, but it was successful. So you guys see how I'm. Yeah, I was fuming. I was just. It took the shit out of me. Like I was. I was just really disappointed. It's like I couldn't talk about it again because in my mind I'm replaying what I already said, and I'm thinking to myself, man, I could have done that a lot better. Oh, look at me double down. Fight for price. Fight for price. Fight for price. Fight for price. Uh-oh, that's not good. Let's see. Below POC. Not a stupidly healthy bounce. They'll probably get me. We'll just leave it alone. Now, if it pops to here, well, to here, then I'll hit break even. You see like that big red bar, how they like to buy after it? Because so many retail traders get that as a signal. It's alright, we'll stop out. Because if it comes back down right now, it's going downtown. Because that's VWAP, both 24-hour and intraday. So if it comes back down, we're gonna go down. And then what? I'm just losing for no reason. If I have more coffee, who knows? Maybe I'll talk about all of the trades and the location and all that. But I only had one big cup. All right, I'm gonna get stopped. Wait a second. Where did that? Really? So after all of that, I probably made 3 or 4 points. But I think I would have gotten stopped because my stops were here. So I'm okay with re-entering. Although I don't want to re-enter right now. I don't. Why? Because we're into the body of this. Without as much resistance as I would have wanted to see. Yes, we have a trend line. 1, 2, third tap. But we should have bounced here and then gone, right? In other words, this should have been our bounce point, not, yes, could it go here and then do this? Sure, couldn't do anything. But, and we are nearer the close, so some bigger players are playing. They're going to be looking for, they're hunting liquidity. But, just in the ideal scenario, all of these bodies and these wicks should act like support. And so it should be bouncing above the trend line, not violating the trend line, right? And then you get all those traders who figured out that 3 taps of a trend line usually produce a nice little short-term short. And then, if you have a space there and it rips, then they're fucked, right? But what was volume like? Yeah, it picked up, but not to the point you would want it to pick up to, a much bigger bar. So trapping volume, sellers. So it's just not, it's not ideal. So I looked for the POC bounce, and we have VWAP right above. Didn't even get to the trend lines. We're not even stopping trend line traders. So this looks like a successful breakout to the downside. That said, that's all just probability. Anything can happen. It's just my thoughts in real time. Total number of trades today, by, well, not by contracts. Let's go flat to flat trades. You know, I don't really want to open that screen because I don't know how it's going to react with this software. Oh, you see the nicey tick giving us a buy right there? Right here. So this is the nicey NASDAQ tick. It's much better than the nicey tick. They gave us a buy at 97.50. So this is set to 2400. I move it around based on ATR and the VIX and structure. Again, trading is context dependent, isn't it? Coffee is life. Yeah, sorry, I'm a little late on the trade. So see how we had that signal here? 97.50 plus 2 points. Oh, they might have got him. They might have got everybody. Yeah, it does flash clean right up there, top left. I can set it up for auto trading. Absolutely, I already have. You think this is the only Sierra chart screen I've got going? Or the only account? Come on. RJ, you know. You know how I roll. Well, you could rewind it, Lucky Prod. What would the time be? 12:40? Yeah. Let's rewind it a little bit. 3.5 minutes ago. There is an emoji. Let's see. Oh, at least I think there is. My roll is. Shit. Maybe there isn't. I think this is my roll. Deathbring. Oh, let's see. Does that does the screen flash off when that happens? Let's see. It's a 10-second delay. So all my screens, I hit something and it minimized everything. Nope, I guess not. Oh yeah, the cache counting. That doesn't. That's not happening right now. Is this your check? Is your channel open daily? My channel is not open daily. It's just whenever I have a whim to open it after having a good morning. So I just want to stay connected to the markets. But what I should be doing is walking away and hanging with the family. But just enjoying being in the market. This is my full-time job, but again, it doesn't feel like it. As a few of you know, I can trade for 15, 16, 17 hours a day easy and lose myself in it. Not healthy, but I just love the markets. It is a game. But for some people it's not a very pleasurable game, so it's stressful. So for me it's as long as I'm patient, I'm able to be patient, it's not that stressful. That's for me the biggest obstacle every day is just learning to SOH, sit on hands for most of the time and then take my setup. Yeah. Yeah. No kidding. Yeah, there was a time where I was trading like 20 hours a day. But that was the good old crypto. Oh, so that little tick was the bottom there for short term. Some people like pain. Yes, they do. Well, what makes the markets playable is that so many people feel that they can be successful because there is randomness to the market, right? It's like, why do people gamble? You'd be surprised at how many people actually think, being lucky has something to do with anything. It's just pure statistics. Financial analyst for 20 years. That's awesome. Do you find that being a financial analyst has helped you with trading, or is it just not related enough for you? And if it does help, in what aspects? Man, I need more food and water. That's it. It's the low end. Are we going to get a rip to hell here in the last 7 minutes? Yeah, man. See, I haven't checked Twitter all day today. By the way, my Twitter is open. So if you want to look at all my old posts, I'm not posting much to Twitter or even looking. The only Twitter related thing I've got open is my tweet deck. And I follow a few accounts for news, and that's it. And then my Thinkorswim Squawk, World News Squawk box, which is, it's got the Rand Squawk going on it, which I find that's useful. That's kind of cool. But even then, I turn that off a lot of times. I don't often talk about specific individuals, but I think Tommy Thornton, he runs hedge fund telemetry. It's one of the few people I follow on Twitter. He is an excellent trader, but he has had his eyes on Tesla and shorting Tesla for far too long. That is one of the only trades I see him making that it's like I disagree with every day when he talks about valuation. But beyond that, excellent, excellent trader. Wait. I see a black dog flying at me from snow, and I love the picture. Brings me to a totally different place. Ah, it's beautiful. I love the snow. I grew up in Oregon, which, we have more mountains and stuff there. A little bit colder weather, so I miss the snow. My wife is a California girl. Oh, that's cool, Rick. And I appreciate the response. Lucky Prod. Yeah, no, I know what you mean. Well, at least for a lot of the macro stuff, getting a sense of sentiment and stuff, I think that's useful. I do, I do incorporate the macro sentiment into my trading, especially for location. There's a YouTube channel called Confessions of a Market Maker, and they interviewed a fellow. I think his last name was like Shapiro or something like that, and he was in the new Market Wizards, and he trades counter trades basically sentiment, but he talks in there about in the interview he talks a little bit about that traders actually have to be positioned a certain way for you to counter trend trade them, and he says that's where it gets a little tricky, right? The sentiment out there. If you're watching CNBC Fast Money, which I don't watch, but he does every day, he's like, if everybody's in agreement and everybody else in the market is long, right? And you look at commitments of traders, everybody's long, right? The commitments. I've got the commitments of trader integrated with Sierra chart. Someone did a really awesome study that integrates into what is it? I'll look at it here. Studies. Quandl, right? Which is free API data for a bunch of things that includes like commitments of trader. But if everybody's net long, where are we at? Oh, okay, right there. If everybody's net long and actually buying, oh God, look at this move. 2 minutes before the bell. And all the pundits on TV are all in agreement it's going higher, then there's probably some short-term pain to be had. So anyway, global macro stuff I think does help with that when you're looking at raw data, and then just looking at sentiment through social media and put call ratios and commitments of traders, and right, you can sometimes just see that stupid money is being poured into stupid stocks, the GMEs of the world, etc. Right? So you kind of get the zeitgeist of the market in general. Sometimes it lines up really well for a nice counter trend trade. Everybody's comfortable. And when everybody's long, well, what do they have to do to take profit? Sell. So typically there's no buyers for a little while as everybody's selling. So make your money quick on the short side, at least in equity markets. 1, 0, one more push up, boom. Or did my data feed just lag? Really? Right at the close? You're going to do that to me, Sierra chart? Jeez. I missed the scalp trade. Little hiccup there. Sometimes when I open up this commitments of traders report, it pulls a lot of API data in, and then it refreshes a bunch of times. So at closing volume, what, 60, over 60,000 contracts? Right in the middle of the range. Doesn't tell us that much, does it? But geez, look at M period. Doing its job. Doing what we least expect. Stopping everybody at that 96, 97. And you heard me, I was getting bearish. So Yeah, hence why I've said it over and over on Twitter the last year. I'm not the best um, market closing trader. I'm just not. I know my weaknesses, and that's one of them. I get it right sometimes, but I just feel like there's a an ebb and a flow to the close that I just don't always get. I think it's because I'm right less than maybe 60 or 70% of the time. And on a lot of these other trades, I'm right more than that. So I just lack confidence into the close. And then if you keep your risk too tight on the close, you tend to get stopped, which happens to me. So, right, I think most days I think the solution is to play with smaller size with the wider stop because there are general setups, right? There are different various ramps and right, you can play the position above POC or below it. Right, you have certain behavior and certain like J and L periods have very specific behavior. So does M as it relates to those. So you get these recurring patterns, but I just find that they go hunt the stops, and so if I widen out my stop losses, I feel like just from a technical point of view, I've already invalidated my trade. But it just tends to work out where it hits those areas, and then it reverses and goes the other way. And you would think I'd learn from that. Okay, path of most pain, buy it, look for good entry, and then a tighter stop loss from that point, but still, you know, not being stopped out on noise. But I just I have a tough time with that because it's so different than the rest of the day. So I kind of have to shift gears, and I don't always shift gears properly into the close. Hey, thanks, Lucky Prod. I appreciate your nice words. I don't have a streaming schedule. It's just by my whim. If I'm in the markets and I'm fighting really hard for price, I won't be on here. Like I've told everybody before, this is right. This is a competition. So if I'm here, it's because I'm relaxed and I've made money, and I'm just enjoying the conversation, and I enjoy sharing my thoughts to test some of my ideas. Um, and so for that, I appreciate feedback always. But it's I'm not here to give anybody a trading signal or uh, you know, it's that's the purpose for me. I guess it's a little bit more selfish, but I see value in sharing for myself, but I also do enjoy when people learn as well. So, right. Thanks, Scott. Appreciate it. So I'm just being really honest. I'm not blowing smoke up in anybody's ass with my responses here. I mean, ultimately, if I think I lose edge by sharing with even 20 people, right, and they're all, I don't know, let's say trading between 1 and 5 lots, that will affect where I get fills, especially if there's no delay or very little delay on the feed. So, the algos are very good at front running, even with, 5, 6, 700 contracts at a tick. And I fight for price, man. I fight for price like hell. Yeah, I think it's good. Um, I think it's good to hear what other people have to say, as long as what they're saying is rationalized fairly well, right? Some people have a lot to say, but they don't provide any rationale. And for me, if I'm entering a trade, I'm trying to talk out uh, my logic, right? I'm trying to rationalize to anyone who's listening why I'm getting into a trade, and that sharpens my mind. It sharpens my process because when I'm doing this by myself and I'm not talking to anybody or nobody's looking over my shoulder, it's just human nature to not trade as sharply. And again, there are always exceptions to every rule. There are folks who trade better that way, and on certain days I trade better that way. But most days after a certain point, I do better when I'm actually uh, sharing my ideas. Iron sharpens iron a lot of times. So I want to make sure that if I'm sharing an idea, it's worth sharing. It's not just a shit idea, and I'm not just, spewing out ideas in volume that are shit. So, anyway. Hey, another example of clearing the book. We saw that in real time. So a 5 tick market buy. Some big boys out there. Look at that. So see how the bid and ask lines followed price, even though they were big buys? Here, it's a sweep. So I hope you guys are seeing that. I did a little video on it. It's labeled in my videos. I think it was a live stream, so if you want to find it. So hopefully you guys are starting to see that. Those can be stops or it can be aggressive buyers. But typically, when you get to a point where there's support or resistance, like a known support or resistance, and the structure, let's say, price moved off of I don't know, just a fairly large rate of change like this, right? It's the rate of change is pretty high. So this is 13 o'clock, and within 15 seconds, okay, we have price move from '05 to '07. Well, that is going to cause some folks who are short the market to cover, right? And you see that. They just market bought. So that rate of change, it terrifies some people. They think, wow, a breakout's coming to the upside. Well, something's happening. This is moving too fast. And so they cover, and that marks a short-term top, right? So if you can kind of see that, this is how price action is behaving short-term. You can use that to scalp around the close. And I often do, but it happened again here. Look at the rate of change. Accelerates, up, stop. And then, marks a short-term top, right? And you get a little bit of time here to hit the bid. '07 to '0650. So, can you scalp 2 ticks or 3 ticks? Yeah. 3-tick scalpers in the ES are very common, right? And so now price is starting to calm down a little bit. We're getting some whipsaw back there. Why? Because of volume traders, man. When you start to see volume traders out and about, it generates short-term volatility. So right? So if you use something like this, a large volume trade indicator that shows you how many lots transact, that's how many lots are transacting at the tick, right? So this isn't going to show you a big order sweeping the book. That's not 300 and that's not a 338 lot sweeping the book. That's a 338 lot at the tick, right? Which is why looking at the bid ask in this book map style shows you a sweep. So maybe that's a little useful for defining the difference. And again, you could look at all this stuff, but if you take it all linearly and just say like, oh, a big order transacted here. The rule is when big orders transact, then I do the opposite. Well, you're going to get screwed unless you look at the context, which is what I've been talking about all day long. So look like there could have been a 1 or 2 tick sweep there. Let's see. Let's see if my time and sales eye is sharp. Yep, see that? 1 tick. See, this stays flat. Price moves up, and then it comes back. So, yeah, it's not like it swept several levels, but yeah, someone's. Oh no, wait, that's not. Wasn't even looking at the right spot. I think it happened here. So yeah, no sweeping. I thought it might have been a 2 tick sweep. That's where that signal came in on the bar chart. The buy. Right there. That's where it flashed. Oh, buy. So what was that? The 96, 97s. Right there. So in a ranging environment where you get a big market wide tick to the downside, sometimes it does mark a local bottom. So that's kind of interesting. Just good to be aware of. It's not perfect. Let's see. Where was the top tick was here at 11:30. Let's go see what that looks like at 11:30. Right here. Yeah, so little breakout here. Everybody got bullish. Everything started ticking up. Oh my god, we broke the 618. Outside of value if you're talking about ES. So, ES is an index, represents a basket of stocks. So it's a great indicator for when folks start to buy a broad number of stocks. So yeah, you could see that the top tick of the I guess afternoon if you're in the eastern side of the United States was right here at 11:30. And did that give you a few points? Yeah. If you got in here at 11, you probably struggled to get out for a 3-point winner. But if your stop was wide enough, see, I would have probably played with a wide, if I wanted to do the wide stop and ignore the footprint ignore all the short-term price action because I did short in this area, but I covered for a small winner. If I wanted to ignore that and just put a nice ATR based stop, maybe at the LVN or something, then let's see, entry would have been, so exit, we'll start with exit, would have been just above the LVN. That's, to me, the safer place. The entry, let's say, as that flashed, I would have fought for entry, but okay, let's be conservative, would have been about 11. And then my take profit would have been right in here. So what's the R? 0.96, so almost 1. Right, would have taken profit essentially right into this. If I was holding, I'm thinking out loud. Where would I have gotten nervous? Here, just by structure. Didn't take out the candle high. And if it had come down here, let's say I was short 10 contracts or something, I would have moved those contracts outside of the trend line because it didn't bounce above like I was explaining earlier. So since it didn't bounce here and keep going, I would have taken off some here, maybe half, but the others I would have lined them up here. So half here, and then the rest scaled out to about maybe above POC, because I like to take profit into strength, not chase once it bounces. So half here, a little bit of math, half there, so my average would have been here. Right, a third, just do, oh. So it would have turned into a 1.12. I'm just being brutally honest. I wouldn't have sold down. I would not have covered here. I would have covered above POC. So taking profit here and then scaling out down in here above the point of control, I would have had an average here approximately. So, you know, what is that? Stop is 6.5 points. Profit is 7.25. It's tough. It's tough to play these kind of moves. This is hindsight talking, obviously, but that would have been a tough trade to hold, especially with all of these negative deltas, right? You think, well, there's got to be some covering that's going to happen, because when you're in a position and you get a delta, cumulative delta divergence, you're thinking, how can I protect my profits, right? So your bias is going to be, oh, there's a cumulative delta divergence here. Let me take profits sooner, right? So would it have been a tough trade to hold? Absolutely. Just from a psychological perspective, it would have been a very difficult trade for me. Now, when I'm not in the trade and I'm looking, you're asking me about cumulative deltas, I'm thinking to myself, well, there's a lot of downside cumulative deltas, and it just shows that we have a thinner book, which that's the case. The algos are making a killing today. So, yeah, of course, more bids are being hit today, but, that doesn't mean that the bids are not underwater because the book's moving, and so they don't just become sellers and hit more bids. Doesn't mean that the price can't just keep going down. In a low liquidity environment, it can. So you have to discount the cumulative deltas when liquidity's thin. When it's thick and there's a cumulative delta, like when there's a lot of liquidity and there's the cumulative deltas are diverging, well, then maybe use it as a signal. to maybe get long, right? Or there's going to be a short squeeze. But in this kind of environment, a little bit more higher ATR. What was the ATR all day? Maybe 6 or something? Let's see. Let me show the study here. I know it's here somewhere. Where is it? Buried in 50,000 studies on my chart here. There it is. Yeah. So, this ATR is dictating how the algos are providing liquidity for the book for the rest of the day. So, and you could just physically, you can look at it, you can see it and see that, hey, the liquidity is low. And so algos are going to pull and stack to their advantage and capture ticks all day long. So, ask minus bid volume or delta is just not going to mean that much on a day like today. At least that's my take. Hmm. Didn't even get the singles. Up at 17. Look at that T plus 2. See, closing at highs. So the bright green is regular trading hours TPO here. So closing at highs, closing at highs. And then up into the trend line, a 2-month trend line. FOMO above it, selling on volume at the open. And if T plus 2 is breached, you just have institutions who are going to de-risk. So we had that 87,000 5-minute bar, 20-point travel, right under from T plus 2 down. There's that bar. Right there. So 0950 all the way down to 90. So, 19 points. And they de-risked. That was T plus 2 right there. Right, so reason for taking profit, value area highs from prior sessions. So take profit above it. But ended up punching through it, and I saw, well, we have this value area low. If we push through here, which we did, we pushed through, we consolidated, and the next target was the virgin point of control. So take profit at 81, get long underneath it, some stops, nice tight stop. Here's another value area low from this one. So stops just underneath that. Didn't even get there. So trade worked out. Took profit. 6 points, 5 to 6 points up. Shorted 10 SMA. Scalped it. Shorted VWAP. Took nice profit in here. Got long again because we held this area. I actually fought for trade location. I got it here at 92.5, 93s. Rode it back up. That was a nice bar. And then played it a few more times into value area low. So just played mean reversion. I could just see by the price action here that we're selling down on low volume. Right there. So it looked like to me that algos wanted fills. That's an experience thing. The book being pulled on low volume. Usually when you get a sell-off volume, it usually happens on high volume. So when it happens on really low volume like that, and then it loses momentum, and then it stops out the low wick of the recent, very low time frame swing low, and then it doesn't go anywhere, it's a good long. So I just anticipate that. Again, fight for position. Stop was right in here. So the stops didn't take it very far, which indicates to me at the time that there wasn't a lot of interest to sell this area. So at this point, the shorts were more nervous than the longs. So, yep, slow grind up. Retesting this area, the previous close. Couldn't get anywhere, but consolidated higher. And then a nice little push. Taking out all these stops with this area was the high NYSE NASDAQ tick area. Everyone got bullish. And what is it? 13, yeah, so. And we had some absorption here, but also some aggressive selling. And a lot of these deltas were formed here. Right? So we can just remember that. But so earlier in the feed we were saying, probably a lot of trap longs, and then I reasoned that out. So, and then this went much further down than I thought. Passed beyond the body here. So that was a small winning trade, but I would have stopped and not had any conviction to go long, which, hey, you can't win them all, but that's tricky. For me, that's tricky at least. I'm sure someone else got it right, but not I. Absorption at 09. And the size is off the books. So one of the things that I do is I go into my market depth historical graph and I change the highest quantity for coloring and the lowest to something that will give me an idea of where the liquidity is. So as you can see, now you can see a little bit more. Of course, it's going to skew all this, make it look like there was ridiculous liquidity. But that's why we keep the numbers in there for a little bit. I could even adjust this, the max and the minimum, down a little bit. let's say 150. And the minimum, oh, 60, and we'll say the minimum is 25. There you go. Now we get an idea of where liquidity is. Okay. So 10 and 14. Right? Which we know this is the bounce high, 14 and a half. Right? So good luck getting over that. Might happen, but good luck. And then singles are somewhere in here. So just a bit higher than singles, and then that 20 handle is right above, which is the extended or Globex prior session, Globex session point of control area. So there's going to be sellers in there. So let's go see where liquidity is on the downside, right into the RTH point of control above it. What about 10 ticks below? Willing to buy for the bounce, willing to buy for mean reversion. That's smart. That is what I would do if I were letting resting orders sit on the book. Why? Because if you're short from point of control, there's going to be a lot of shorts, a lot of longs. So you're going to get initially shorts covering, a little bounce, de-risk for 2 or 3 points, and then as you come back below point of control, you're going to have a lot of shorts and a lot of longs, so you're going to get chop action. So why wouldn't you buy? Makes sense. Right? And then the 95 handle. And then down near the lows, before the lows actually. It's 383 contracts sitting there at 82. So quite a bit of liquidity on the downside. And then some value traders down here. 60. The Mancini level. Adam Mancini at 75,000 Twitter followers. Love buying his levels to the tick. Not criticizing. He's a good trader. And then this liquidity below the POC. Yeah. The virgin point of control, that's at 55. So as this comes, if price comes down into this level, what do most retail traders see? 10 levels deep. So POC is 55. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Is that right? 55. I'll do it again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So as we come into 55, you'll see 10 levels deep. They will see this bid. Oh, virgin point of control. Resnicek. All he trades on Thinkorswim. A lot of his people trade on Thinkorswim. A lot of them. They only see 10 levels deep. It's going to initially bounce probably. So, and someone wants to fill. So what might someone who knows this do? If you get a stop run, buy in this area. 55 down to 53 and just scale. Fight for price. Maybe you get the initial stop, boom, they see it and they buy it up. And they don't see it anymore. And you scale out some. And then it comes back. And then people freak out. Oh no, the liquidity didn't repel it. That's psychology. And then it comes back, it comes back. Maybe it loses momentum. Maybe it doesn't. I don't know. But at least then you fought for price. You're a little bit long. You can have your stop down here, but play the initial bounce. Right? That's one way to do it. Some tasty tricks there. There, let's just double click this thing and get it back to centered. And right back up to the area of liquidity. And then at 3 o'clock, we get a new daily bar, and they stop run. They stop run it, which you'd find liquidity above 14. Right? So if we come back at right after settlement and we see the bid and ask up here, you know you're going to get a wick. And they're probably looking for liquidity. So the bid and ask will attract, you know, people who are still short, and they'll all stop out. But yeah, they're, when I say they, the market makers and players and Globex thin books, they're absolutely, they are vicious. No mercy. And you see this bar just closing at the lows, and then it never got taken out. So there's stops here. So we'll just do this. Okay. With, man, some major negative deltas. So how, and they'll just push it. They'll push it considering rotation from RTH to whoever's feeling the most pain, the short-term hands, and they'll push it through that zone, getting fills. So who would have gotten shaken out today? Look at it and maybe you say everybody, but that's not the case. There is going to be a remnant of traders, long or short, that are going to be weaker in Globex. It's just how it is. So you can watch price action and see how it moves against levels. And then you can kind of figure out, okay, of those who are holding, which side is weakest and where's the liquidity at? And then counterplay that liquidity. But yeah, singles are tasty. Even in Globex, which would be right in this area. 17. So, let's see. Yeah, I'm going to say that this has massive potential for a short-term reversal, at least to this point, right? You could fight for price and get a fill into 18, 19, or 20, and then play a movement back to 15. Move your stop, get out, take out half your position, move your stop down a little bit. Maybe play like of the move from here to here, play like put your stop like 80% of the way there, 85% of the way there. Because, if it bounces all the way back up, chances are it takes you out. Keeps going. Doesn't have to. Can go a little higher and roll over, but again, the Globex movement is a little bit different than the RTH. Interesting. Jeez, I'm reading this Bloomberg article that focuses on AMP Capital. I thought it was. Wasn't sure that it was AMP Futures. It's not. It's AMP Capital Takeover. Okay, so that doesn't relate to me. Hey, have a good one, RJ. Sleep well, my friend. I'm gonna go hang out with them, so I'll go tell them you said hi. And yeah, nice chatting with you, if even only in this form. So have a good one, man. Look at that, distributing here to here. Man, look at those cumulative deltas. Negative 27.5 thousand. A lot of bids getting hit today. A lot of bids. It's probably lends towards more upside if just the fact that bids are getting hit like that at that kind of clip suggests that players are fearful of a sell-off in the market, right? Because we had a nice scare today, but it's not like it went and completely wrecked the daily structure. It's not wrecked. Yeah, not wrecked at all. Some more downside would even be healthy. That's all she wrote. Have a good one, folks.